The US dollar about to fall off a cliff against the Swiss franc, or is it coiling up for a massive rebound? That's the big question for USD CHF right now, and the charts are telling a fascinating story of a market at a major crossroads. Let's break down what's happening. The dominant feeling in the market appears to be bearish, and there's a compelling technical reason for it. On the 4-hour chart, USD CHF has formed a clear descending triangle. This pattern is characterized by a series of lower highs pushing down against a flat support level, which typically signals that sellers are growing more aggressive. Adding to this bearish pressure, the price is currently trading below key moving averages, which often act as dynamic resistance. This suggests that the path of least resistance, for now, is to the downside. This brings us to the key selling point to watch. The base of that descending triangle is a critical support level right around 0.79. A convincing break and close below this level could be a significant bearish signal, potentially opening the door for a much deeper slide. Traders with a bearish bias might also see the current price struggling around 0.80 as a potential area to initiate short positions, betting that the downward pressure will continue. However, it's not a one-sided story. Whenever a currency pair approaches multi-year lows, as USD-CHF has, you'll find traders looking for a bottom. The sentiment here is that the sell-off might be overdone and a bounce is due. This creates a potential buying opportunity. Some traders are looking to buy near that same critical support level of 0.79, placing their bets on a strong rebound from this historical floor. A more conservative buying point would be to wait for a decisive break above the triangle's descending trend line. A move above the recent highs, pushing towards 0.81, would invalidate the bearish pattern and could signal that the bulls are finally taking control. So, to summarize the key takeaways, the overall sentiment is cautiously bearish, driven by a classic descending triangle pattern and weakness below key moving averages. The market is pressing down on a major support zone. The critical level to watch is 0.79. A break below it could trigger more selling. Conversely, a strong defense of this level and a push back above 0.80 could signal a bullish reversal. In conclusion, USD CHF is locked in a battle between a bearish technical setup and a major historical support level. The next big move will likely be determined by which one breaks first. As always, whatever your view, ensure you have a clear plan and manage your risk accordingly.